What's going on, guys? In this video, we're going to talk about blowing up funded accounts. So you spend a lot of time, you spend a lot of money trying to pass evaluation accounts. You finally get so excited when you pass that first funded account, or you are adding to your portfolio of funded accounts and you're eager to trade. And what I want to talk about is when I've blown funded accounts. Yes, hand to the sky. Have I lost funded accounts? Absolutely. I've been trading prop firms for going on 3 years now, and with multiple different firms: Apex Trader Funding, Top Step, Take Profit Trader, Top One Futures, daytraders.com. Have I blown accounts? Absolutely. And there's a lot of very important lessons that I've learned along the way. And I think the last time, if my memory serves me correct, the last time that I blew a funded account was about a month and a half ago. It could be closer to 2 months now, but I want to talk about that one particular scenario. Now, I do have a collection of funded accounts right now. I've currently got 14 accounts spread across 3 different firms. I do like to trade them individually. I don't really copy trade that much. If I do, it'll be in a group setting where I'm putting maybe 2 accounts together at a time. But where I run into the most problems and where I have blown up accounts the most is when I let my emotions get to me. Now, again, you may be thinking to yourself, that sounds very basic. Of course, emotions are involved in trading, and that's why we all lose accounts or this, that, and the other, right? But I want to go over one specific thing. If you're looking at this chart, I want to go over one specific thing and a reason that has caused me to lose funded accounts. And ever since changing this one thing has helped me not blow another funded account in the past. I mean, I'm going to say better half of almost 2 months. It's been about a month and a half to 2 months. So the one thing that has helped me is, let's say, for example, I show up to work, I get here, I'm looking at the price action. Price action here is definitely bearish. It's falling down very extreme. I'm kind of looking at, this prior structure from pre-market and this prior structure from pre-market, kind of looking at these areas as swing lows. Maybe potentially if we get down to that area, maybe we sweep that area, then potentially there's going to be a bounce, right? So automatically, for whatever it is, and I wish I had the exact answer, but for whatever reason, my brain automatically goes to, okay, this is a fake out. We are going to bounce from here. I immediately go to thinking that. So when I do that, a lot of times I will see a previous low from the pre-market get swept. And then once it closes and the candle starts to bounce, I immediately jump in long. I jump in long without any closure back over a 20 SMA. I jump in long before we kind of take out the swing high, or before we take out the pre-market high, before we break and retest, hold, and then go. That would be the better thing to do, right? I think we can all agree on that. But my mind automatically goes to, we just swept the pre-market low. We're starting to bounce. I need to jump in. And here is the second portion of that. I jump in with way too much size. So instead of trading my normal 5 micros or 3 micros or 4 micros, I jump in with a mini contract. So I get in, the move starts to go in my favor a little bit. A lot of times I might be up $150, $250, something like that. And immediately there's like a split second pause where I feel like it's like my brain shuts down for like 30 seconds. And there's one thought that comes into my head, and it's, this is probably going to go back up and take highs. And the moment I think that is the moment it starts to put in this wick. Okay. And then that's the moment it starts to turn around and go the opposite direction. So right there in that split second, in that 30-second window, I go from being up $100, up $200, to now I'm flat, to now I'm down 150, I'm down 200. And now I start to panic. And maybe you've been there before. And if you have, let me know down in the comment sections. But it's at that point in time, I start to panic and I say, okay, well, maybe if we just hold this low, I might be able to recover. And it's holding on for that split second longer, that 2 minutes longer, that 1 minute longer, where truthfully speaking, I didn't take my profits on this candle. And I go from, let's say, an entry price of 23,296. I'm using today's price action as the example. Let's say I'm in somewhere around 296. It kind of shoots up. I'm up a couple $100. I don't take the profits, obviously. I hold because I have that lapse in judgment where I say maybe this, kind of trades all the way back up towards these highs and I'm going to make so much money. And then it pulls back around. And now it closes 5 minutes later down here with touching lows of 23,258, but it actually closes at 277. But I'm in somewhere around these 290s. So I'm down 20 points. And when I'm down 20 points or down greater than that at one point in time, 30 points, let's call it, we are talking about being down $400, $450, $500, $600. And a lot of times I'm forced to just emotionally exit the trade because I don't want to be wrong anymore. And I take a $600 loss. And when I take that $600 loss, everything goes out the window in terms of my risk management, my daily plans, because I made one mistake. I made the first mistake of getting in long off of a pause candle. I made the mistake of getting in long before we've reclaimed any of supplies. I know that's wrong, but I'm trying to, I guess, almost anticipate. And number two, I was sized way too heavy. So having to take the $500 to $700 loss results in me automatically going to, well, if I don't recover this money, the account is blown. And is that the case in fact, the case in point? No. Even a $500 loss, $700 loss does not mean that the account is gone. It's going to be a little difficult to kind of get it back to flat. But I immediately go into this mindset of, I've got to recover what I just lost, because if I don't, I'm going to lose this account. Meanwhile, I'm not even focusing on what the momentum is doing. I get trapped in, well, I went long here, but maybe I was just a tad too early. I will wait until we come into some type of demand, some type of support. Now, in this case, it's the linear regression for me, and it's also the daily 5 SMA. So I do the same thing. I allow it to sweep, and then as soon as you got to think about it. This portion right here, I want you guys to focus on this. This wick right here, at one point in time is green. So when I'm watching the candlesticks, it's pushing up, pushing up, pushing up. I'm still stuck in this market's going to bounce. So I go long again. And when I go long again, because quote unquote, I'm going long off of support, immediately it's a failed move and it starts to crash. And that is where I get caught and I blow funded accounts. It's happened to me multiple times over the past 3 years. It's happened to me less since I've gotten away from trading big size off the open, since I've stopped jumping in before there's confirmation when it's a trade against the trend. So in this particular scenario, I would have needed it to close over the 20 SMA. I would have needed it to close over pre-market highs before I go long. In this potential situation, off of support, yes, I would have needed it to bounce off of support. I would have needed to see a green candle close over support. I would have needed to see a test of this level and then maybe a retest. And then now maybe some type of bull flag before I can go long, and now using this as a stop loss. So not waiting for those series of events to play out, anticipating what I think is going to happen, and taking trades with no confirmation because I'm rushy, I'm anxious, and trading size that's way too big for the open, for the size accounts, and I trade $50,000 accounts, so normally I have between $2,000 and $2,500 of drawdown, trading too big a size for that type of day. Let me know if you guys have run into that problem. And the change that I want to make is, even if you think that this is a trap, you need to wait for some type of validation that it is a trap, that maybe we get back over supply, maybe we get back over the opening print, maybe we break pre-market highs, back test, hold, and now set up some type of bull flag. Wait for that one extra step of confirmation. Don't jump in against the trend just because you feel you're timing or catching the bottom. And make sure your trading size that's sufficient enough for you, that it's not going to blow you out if you are wrong. I hopefully maybe this opened the door or shed some light on what's caused me to blow funded accounts. That's trading too much big size. Again, I'm recapping it because I want you guys to get familiar with it. Trading too big a size, jumping in on momentum because I feel that it's a trap and I'm going to catch the other side. And then when I do take that loss, like here, there's nothing wrong with taking the loss here on that idea. Trading too much size, that's one thing. But let's say even if we were trading small size and we took the loss on this first bounce idea, right? Instead of immediately going to and sticking to, oh, well, now that it's down at this new support, I got to do it again because now I'm getting even a better price. When realistically, it was about a 30-minute trend just straight to the downside. What I should have done is allowed it to break this and seen that it did not, right? For example, it did not reclaim this level and that the continuation is going to be down and look to stay with the trend short. So stay with the trend as best as possible, even when your brain is telling you and you feel that it has to bounce, it has to reverse. This is nothing more than a trap. I've missed the short, so now I got to go long. Get out of that mentality because the market doesn't have to do anything. The market can continue to go down. It can continue to go up. It doesn't really matter what you think. Also, trade size that's not going to blow you out of the water. So maybe when you're kind of building up your buffers and your cushions, maybe you're trading 2 or 3 micros. So that way, even if you are wrong on a big move like this, yeah, you're going to take a little bit of a hit, but you're not going to, go on tilt to where you feel like you're going to lose that account. And also stop trying to keep with the same bias. And what I've, kind of come to is if I was wrong the first time, my brain, whatever it is, maybe it's just me as a person, but my brain thinks, well, I can't be wrong twice. When that's it's the stupidest thing that I can do. If I was wrong once, I can be wrong twice. If I was wrong twice, I can be wrong 3 times. Stop trying to force being right in exchange for losing your sanity and losing your accounts. Just do what needs to be done to preserve your capital so you can stay in business. I hope this helps you guys. If you guys need Apex evaluation accounts, 80% off right now with code DAnthony. If you guys want to join my Discord where I do mentorships, I have you can get access to my courses with all my trading strategies and trade with the team. Definitely join Evolution Traders. Going into the month of August, I plan on doing some really, really cool stuff. Some challenges in there, some day-by-day playbooks that we can follow. So if you want to take advantage of that, get in now so you can get yourself familiar with the room. That link is also down in the description box below. I will see all of you guys on the next video.